You may find yourself worried about the gold price, about the silver price, about the platinum price. But what does it mean when the mainstream media, yes, our friends at CNBC, put out a big article talking about the future price of gold in particular? But we know when they're talking about gold, they're also talking about silver. They're also talking about platinum. And they've got like 4 or 5 analysts that make predictions for the coming year of what we could see for the gold price. And it's downright shocking. It's good news. We're going to dig into it during this video. So stay tuned. But there's even more because we got news from a big European country. What are they doing with gold? Are they maybe buying gold for their central bank? And why might they be doing this? We're going to talk about that as well. Thanks for joining me. Please give this a thumbs up. It helps get the word out to more and more people. And if you haven't subscribed, please consider subscribing. It's free, and I'll make a video for you every single day. Let's dig right into this article. Again, guys, this is from CNBC. Yes, that's CNBC. Mainstream media. Talking about gold, right? They never talk about gold. And when they do talk about gold or silver or platinum, they oftentimes laugh it off. But what big article? What are they saying? And what are 5 big analysts saying about gold? Let's dig into that right now. Title of the article, published yesterday from CNBC. Gold prices to reach all-time highs in gold prices. Some expect bullion to hit $2,500 per ounce. Key points, spot gold price, record they're saying now, so we can remember this, the all-time high record for gold, $2,072 back in August of 2020. So it's been 3 years since we hit an all-time high in the price of gold. Does it feel like it's time? We know what it's felt like over the last 3 years to be invested in the precious metals. It's obviously been a bit of a bumpy ride. I think we got down to about $1,600, but $2,072, that's the new all-time high we got to hit. And remember, what we talked about many times, and these analysts, you're going to hear what they say. I'm going to share this with you. But once we get past that all-time high, once we get to 2,100, we're going to zoom right up to 2,600 or maybe 2,500. Let's hear what they have to say. Gold has outperformed most other major asset classes in the past 12 months. That was according to TD Securities. Listen to this one. Livermore Partners is also calling for gold prices to rise by 26% by the end of next year as recessionary fears hang on the horizon. Yeah, do you think we might be having a recession? We're going to talk about that as well. Gold prices are on track to rally to all-time highs in 2024 on the back of tapering interest rates, looming recessionary fears that elevate its role as a safe haven asset. Here's a quote, okay? Here's a great quote. Spot gold prices hit the record high. We talked about that earlier. According to data from Refinitiv, analysts who spoke to CNBC say the gold price could surpass that level and push beyond into record territory. Record territory for gold. What does that mean for silver price? What does that mean for platinum price? We know what that means. Here's a quote. I do see a gold move above 2,100 in late 2023. That would be in the next 4 months, guys. Early 2024 as a trading level. That's from TD Securities, Bart Melek. He's the managing director and global head of commodity strategy, attributing his optimism to potential pause in the U.S. Federal Reserve tightening cycle. We know that. We've talked about that. The Fed is at the end of the road, right? They can't tighten too much more. And that's what TD Securities, that's number one. That's what they're telling us. We're going to see how many analysts we've got because there's a lot more they got there in this article. I'm positive on gold as I believe that the Fed will tilt policy away from its current restrictive mode. This, I believe, will happen before the 2% inflation target is reached. Spot gold, as we know, guys, is right now trading at 1900. Here's something interesting for us. To get to an all-time high, to get to that $2,500 level from where we are right now, it's only going to take a 30% increase. Is that a big increase? What do you think? Yes, that's a big increase. Is it possible? 30%? Look at what Amazon stock has done this year. Look at what Apple stock has done. 30% is really not that crazy of an expectation for the price of gold to go up. And we know that if we see that, we could easily see, right? 40, 50% for silver. Could you imagine 50% from now? That would get us up to what? $38 silver. It's within the cards. It says the Fed began its steady stream of rate hikes in March of 2022 as inflation climbed to its highest level in 40 years. This is what all the analysts are saying. Right now, we've got rates around 5.5%. Gold has outperformed most other major asset classes in the past 12 months. The guy from TD Securities wrote in a recent report, attributing I can say that, attributing it to the yellow metal's ability to resist rising interest rates and its value as a safe haven bet against inflation. Remember, gold, 1900, that stinks, right? Big picture, we're only 30% away. We're only 10% away from all-time high, 30% away from $2,500 gold. This is not out of the question, and we've been fighting against horrible weather, horrible headwinds in the precious metal sector. Same goes for silver, same goes for platinum, okay? Some analysts, here, this is where it gets interesting. Hold on here. Some analysts are particularly bullish on gold and have called for a target of $2,500 by the end of next year. That's more than 26% higher than current levels. So only 26% increase to get to 2,500. Here's a quote. My target is 2,500 by the end of 2024. Much of this has to do with the fact that recessionary forces may take hold beginning later this year and gain steam into 2024. That's from David Neuhauser. This is the difference. This is analyst number 2. Founder of Livermore Partners. 2024 is when I see gold breaking out and reaching new highs and beyond. How does that sound to you? New highs and beyond. Does that sound good? So that's analyst number 2. He also said he expects stagflation to persist in the global economy for the next few years as inflation falls to between 3 and 5%. How many times have we talked about stagflation? We talk about it. If you notice, the mainstream media doesn't talk about stagflation. Guys, go back and look at history. Go back and look at the 70s and the 80s. Stagflation is the most fertile ground you can ever ask for the gold price and the silver price. We are heading into a stagflationary environment, a stagnant economy. Look, there's no doubt we have a stagnant economy. And on top of that, inflation. And we know oil's going up. We know food's going up. Heck, I took my daughters to the Boone County Fair yesterday here in like Northern Illinois, Wisconsin. You want to talk about inflation? It's becoming prohibitively expensive to do anything. Like $10 for a corn dog, okay? If the corn dog indicator is telling us we still have inflation, we have a stagnant economy. I asked one of the vendors who was selling, I said, how many years have you come here? He's like, this is my 15th year. I said, are you seeing a slowdown in people willing to buy $10 corn dogs? He said, yes. So the corn dog indicator is telling us things are definitely slowing down. Slowing economy with inflation, stagflation. That's when gold skyrocketed last time. That's when silver skyrocketed last time. We can't emphasize that enough. Nobody talks about stagflation. That's a nasty word. That's the S word. At the Fed, I bet if you even mumble the word stagflation, you find yourself with a new role at the Federal Reserve. Nonetheless, that can be rocket fuel for the price of gold and silver. We got more. There's more. There's a lot more. So hold on, and don't forget, we also have big news about a European country that's doing something very interesting with gold. Gold tends to perform well in periods of economic uncertainty, such as recessions and stagflation, due to its status as a reliable store of value. This is CNBC saying this. Think about that. Mainstream media saying this about gold. And it relates to silver. It relates to platinum, and is often used as a hedge against inflation. Quote, I'm pretty confident. This is the good. This is gets juicier as we go along, okay? Number 3, I'm pretty confident that within a couple of years, we will see $2,500 gold. This was said by the CEO of Wheaton Precious Metals, Randy Smallwood. Do you know who Randy Smallwood is? Look him up. He's super respected CEO. He runs Wheaton. They're a big royalty company. If anybody knows metals like Randy, he's the top. I mean, there's really no other way to say it. Super, super, super respected. He also says, quote, any type of recessionary move would be positive for gold, adding that he's seeing weakness in the Chinese and U.S. economy. That's all we get out of China. Have you seen the news that comes out of China? They're talking about deflation going on in China. So guys, this is getting more and more interesting. Another analyst, what is this, 4? UOB also forecasts that gold prices will set new records. New records! I know it's hard for us to even fathom. It's been hard lately. It's been tough to be invested in the precious metals. New records? I know it's hard to believe the next year, possibly later this year, okay, we could see new records. And it's not just, it's not just these people. I got one more big one I want to remind you of at the end that are calling for, hey, thank you, super chat. I didn't see, I'm sorry, whoever gave the super chat, thank you. I can't see comments. I'm off location, so I'm dealing with some challenging technical issues, but thank you for the super chat, okay? Thank you. They're very much appreciated. Never expected, but I appreciate it, so thank you. The family appreciates it. It helps go towards the $10 corn dogs. It's getting expensive to bring a family anywhere, I'm telling you, crazy. Okay, UOB, quote, key driver in our positive outlook for gold is anticipated peak in Fed rate hiking cycle, as well as upcoming topping out of U.S. dollar strength. We've talked about that. That's from Hang Kung Hao. That's an interesting name. Hang Kung Hao. Okay? The bank's head of market strategy, global economics, and market research. He's a busy guy, but he likes gold. He said in an email, gold should trade higher when interest rates stop rising and the greenback retreats, he explained. He also predicted that gold will trade $21 per ounce by the second quarter of 2024. Gold prices tend to have an inverse relationship with interest rates. As interest rates rise, demand for gold drops as alternatives like investments, bonds become more appealing and the yield is better. Okay. U.S. inflation fell. CNBC is talking about that. The Federal Reserve in July approved a much anticipated interest rate hike that took benchmark borrowing costs to their highest in more than 22 years. Rates are peaking, okay? They can't raise rates much more. Companies can't afford it. Individuals can't afford it. Americans have over $1 trillion right now in credit card debt. When I bought that corn dog yesterday, I paid with cash, right? It hurt, no doubt about it, but we pay with cash. I encourage you to also pay with cash, but Americans have $1 trillion in credit card debt, mortgage debt, student loan debt. Do you have that? Car debt, house debt, all kinds of debt. If rates go up much further, it's not workable anymore. Guess what else it's not workable for? All these zombie companies that are out there. Yes, hundreds, thousands of companies that have been living off 0% interest rate environment. Right now, right, a lot of the loans they take out are 2 to 3 year in duration. Those loans are coming due. They're finding themselves with interest rates that are going up double, sometimes even triple from what they were paying. Those zombie companies are going to be in trouble. I'm sorry, I got off track. Let's get back to these analysts. Higher consumer demand. Central bank purchases of gold has been consistently strong alongside consumer demand for precious metals. That's according to Hang, that guy at UOB that does every job under the sun. We also see a return of physical gold jewelry demand from China and India as both economies stabilize and retail spending returns. You got to realize that in China and India, they look at gold, they look at silver, they look at platinum much differently. And jewelry demand, right? Indian households have 25,000 tons of gold. That's more than 3 times what the United States supposedly has in Fort Knox. How does that make sense? Does that equate? Right? So we're sitting around, we're thinking, did we make foolish moves to buy precious metals? Did we make foolish moves to buy precious metal mining stocks? And we're hearing all this. And what is it telling us? Right? What is it telling us? From many different directions, whether we look at it from the monetary interest rate Federal Reserve perspective, or we look at it from the Asian demand perspective, that there's a confluence of factors, a coming together of factors that are going to be super. Thanks, Neil, for the super chat. I'm sorry, for some reason, I'm not seeing any comments today, so I apologize, but thank you for the super chat. Always very helpful. And when we get to 100 thumbs up, I'll ring this silly new bell I have here, okay? All right, and when you guys give thumbs up, you know what happens? More people hear about this. You can even watch the viewer count go up. More people join us here in the basement, right? You're a basement dweller, so please give this a thumbs up. First quarter jewelry demand in China was just shy of 200 tons. The strongest season since 2015. What does that tell us? What does that tell us? The strongest jewelry demand in China since 2015. Analysts led by Citi's head of commodity strategy, Akash Doshi, said in a report. That's from Citi, okay? So now we've got Citi talking about gold. Citi projects, this is Citibank, Citigroup, more than 700 ton of jewelry demand from China this year, marking a 22% increase. Wait a minute, hold on, don't leave me. You got 100 thumbs up. For those of you who are new here, every time we get to 100 thumbs up, I ring a bell. 200 thumbs up, I ring a bell. Okay? Thank you guys. Thank you for being here right now. We're talking about silver. We're talking about gold. We're talking about how, thank you, Shadow Work, for the super chat. I wish I could see the darn comments. I don't know what's going on here. Darn it. Anyway, thank you. And thank you, CoinShop Chris. Thank you, Neil. Whoever is helping out moderating today, we appreciate it, okay? It helps a great deal. So that's Citi telling us 700 tons of jewelry demand. Wheaton, Randy Smallwood from Wheaton said he's seen an increase in consumer and retail demand, whether it's jewelry, whether it's bars, whether it's coins. We've seen a pickup in demand. Physical demand for gold across some regions has returned, and central banks' gold demand remains strong. What did we just learn about central banks and gold? The first 6 months of this year was a record pace of gold purchases by the central banks. Who's the most sophisticated financial institutions in the world, right? People talk about, oh, Warren Buffett says this, and you know, Elon Musk does this, whatever. Guys, they're not the most sophisticated. Who's the most sophisticated? The world central banks. What are they doing? Not what are they saying? What are they doing? They're buying gold. Why are they buying gold? And we've got a little more tidbit of information regarding that about a European country I'm going to share with you in just a minute. But when we look at what they are doing, the world central banks, oh, okay, maybe we shouldn't be so worried about our investment in gold, silver, platinum, the precious metal mining stocks. Physical demand for gold across some regions and central banks' gold demand remains strong, says Nikki Shields. This is like the fifth analyst CNBC is telling us about. Head of metal strategy at precious metals company MKS PAMP, quote, emerging market central banks continue to de-dollarize. De-dollarize. What do we have going on in a couple weeks, right? You guys, are you aware of what's going on? Like a majority of the world is getting together to basically talk about moving away from the dollar. And that's the minimum. We could see like a new central currency to be developed amongst those countries, and it could be backed by gold. Interesting, right? Emerging markets, central banks continue to de-dollarize and utilize gold as an alternative in the event of any further Western sanctions. We know what happened with the sanctions. We know that the dollar was weaponized. They sanctioned countries. Countries are buying gold, and countries are moving their gold back to their country because they're like you. What's your philosophy? If you don't hold it, you don't own it. And guess what the world central banks are saying? If we don't hold it, we don't own it because it can get sanctioned. It can get taken away. So we want it back, and we want it back right now, darn it. BRICS countries, namely Brazil, Russia, India, and China, and South Africa. This is the last paragraph. This is from CNBC. This is mainstream media. This goes out to all the sheeple. Not you, right? Not me. This goes out to all the sheeple, the people that are just watch their TV and believe whatever they hear, right? Well, this is what they're being told. Last paragraph, BRICS countries, namely Brazil, Russia, India, China, South Africa, are also reportedly looking to move away from the US dollar to a new currency backed by gold. That's the last word of the whole article. Backed by gold. CNBC. So what does this tell us, right? We've got big analysts, big firms being quoted in mainstream media about gold. Guys, the future looks good for the precious metals. I know it's been a rough road. It's been a bumpy road, right? Since, as this article told us, 2020. Do you remember August of 2020? That's when we had record gold prices. Remember what the stock prices were back then? They were much higher. We've been through heck and back, but it will change. It always does. These things go in cycles. And I'll tell you what else is super exciting about all this, especially with gold. If you look, we aren't big technical traders. We aren't, we look at charts, but we don't try to make decisions based on charts. But a little icing on the cake is if you look at a long-term chart of the price of gold, and the price of silver and the price of platinum are going to follow. There's what's called a cup and handle pattern. Imagine a cup. Look at like a 20-year chart of gold. There's a big cup and then a handle, and that is the most predictable, and most powerful chart pattern of any. And the longer period that it's over, the more reliable, the more powerful it is. And this pattern in gold is over a long, long period of time. So when we put it all together, right, when we look at the big picture, people are calling for $2,500 gold next year. They're talking about what could really spark it is a recession, right? We know the corn dog indicator, but what are some other things coming out? Have you heard about cardboard boxes? Think about this. Just take a step back. What the heck do cardboard boxes have to do with the price of gold and silver? Well, I'm going to tell you right now because it has a lot to do with the price of gold and silver. Volume in the cardboard box industry is down about 10%. How does everything get shipped to you? How do people buy things? Whether you go in person to a store, they're in a cardboard box. whether you get it shipped to you by Amazon, it's always in a cardboard box. And volume in the cardboard box industry is plummeting. What does that have to do with the price of silver and gold? Well, it has everything to do with it, because just like all those analysts said in the CNBC article, right, when the economy slows, when we get into a recession, the price of gold and silver are going to do very, very well. And if the volume, right, the volume of business, the volume of boxes, for that example, are going down, the economy is slowing, okay? We also know from the trucking companies, their volume, they'll say, is down 10%. But when we hear our government talk, what does the BLS say, the Bureau of Labor and Statistics? They tell us the economy's doing great. The GDP grew at 2.4%. Well, let me ask you this question. I'm going to repeat this several times because I have one question for you, Joe Biden. One question. Do you have this question for Joe Biden? I have one question for Joe. Joe, if you are borrowing $1.4 trillion, you're spending $1.4 trillion more than you're bringing in. You're putting our country further in debt, and all you can squeeze out of that lemon is 2.4%. What does that tell us? What if they weren't borrowing $1.4 trillion extra on an annual basis? What would the economy be at? Think about that, guys. Think about that. And I haven't forgot, we got some news about a European country and gold. We're going to talk about that. But when we look at this big picture of what these analysts are saying about gold, and it relates directly to silver. Silver even more so will move more explosively, and platinum as well. The story for platinum is just absolutely amazing. We can get excited about the future of the precious metals, right? Just like I'm excited that you've joined me today. Don't forget, guys, please give this a thumbs up. I'm going to put out a video every day, right? If you enjoy joining me here in the basement, you belong. You're always welcome. Please subscribe. 300 of you are with us right now. I mean, I'm blown away and humbled, and I want to talk to you now about what's going on with a European country. And this is a country that gets ignored a little bit, okay? No doubt about it. But what they're doing with gold is very, very interesting. Can you guess what country it is? I'd ask you, but I can't see the darn comments. So guess in your mind right now the country I'm going to talk about. It starts with a P, and it's Poland. And here's the headline. Poland continues to aggressively buy gold. Guys, Poland is basically a Western country now, okay? They're big. Their economy's actually done pretty darn well over the last number of years. Poland's national bank has increased its gold holdings by 2.3 million ounces since the start of the year. The National Bank of Poland increased its gold reserve for the fourth consecutive month in July. Again, these are big countries. What are they doing? What are the big countries doing? What are the smart countries doing? Does it make you wonder? Does it give you a little pause to wonder, like, why are these countries buying gold? Fourth consecutive month they were purchasers of gold. According to recent calculation, 720,000 ounces of gold were bought last month, valued at about $1.4 billion. I know that's not a lot to you, right? You could probably afford limitless $10 corn dogs, but nonetheless, this is more than any of the previous 3 months. The research estimated that the total gold reserves held by the Polish central banks have increased to 9.6 million ounces, okay? Basically talking about how the new president of Poland has explicitly said, we're going to buy gold and we're going to store gold. Why? Because of safety and security. Why do you buy gold? Why do you buy silver? Why do you buy platinum? For safety and security. And if you don't hold it, you don't own it, right? Well, that's exactly what the countries of the world are saying as well. So as we look out into the next 6 months, year, let's just look at 12 months out, and we listen to what the top analysts are saying about the gold price. We're hearing $2,500 gold. I've said it so many times, and I'm going to repeat it to you one more time. When we break through that $2,072 range and we get to 2,100 and we stay above 2,100 for a week, it's going to be a new day for the precious metals. Gold's going to go from 2,100 to 2,600, lickety split. Look, I don't have a crystal ball. Don't make any financial decisions. Oh, super chat. I can't read. Daniel, thank you guys. Thank you for the super chats. They go a long way. We'll support the family off this. So thank you very much. And it warms my heart. I do work hard to get these ready, believe it or not. So believe it or not, I appreciate it. And it's critical information about the world, goings on in the world, but also about how it relates to silver and gold. So thank you for your support. Okay. So as we look out 12 months from now and we can blast off, can you even fathom, imagine, right? From there, we're hearing calls for $3,000 gold. Who's the other big bank that recently put out very positive news about the precious metals? The big one, the big kahuna. Who do precious metals investors actually dislike generally the most? Can you guess? Jamie Dimon heads it up? That's right. JP Morgan Chase, they also came out just a few weeks back with very positive, bullish predictions for the gold price. And that's gonna bleed right over into the silver price as well for 2024. But what's gonna happen before the end of the year? Are we gonna get there? What do you think? Do you think we'll get to that new all-time high in basically the next 4.5 months? It's gonna be interesting. What could be a big catalyst? Well, heck, less than 2 weeks from today, we're gonna have the big BRICS meeting. It is upon us. And we're gonna get a big number of announcements out of this BRICS meeting. We know it's crazy what's going on. And the big wild card, I heard Andy Schechtman talking about this last night, is Saudi Arabia, right? They are very involved with the BRICS. And Saudi Arabia had traditionally only traded oil in dollars. They're moving away from that. We could get some serious big news out of the BRICS, right? People were talking about an announcement of a gold-backed currency. I'm predicting that's not going to happen, but I'm not 100% confident. Anything is on the table, okay, as we head into these big BRICS meetings. But catalyst-wise, it doesn't have to be, it's not all or nothing. It's not like, oh, the BRICS either are or aren't. We know that the trend of what they're doing is moving away from the dollar, and we could get a series of announcements that could be very supportive, bullish for the precious metals prices. I'm not leaving until we get 200 thumbs up. I'm sorry, okay? We got more to talk about. and we need to get to 200 thumbs up. All you have to do is press that thumbs up button, and it makes me smile. And when we get to 200, I'll ring the bell, right? But what do you think's going to happen at the BRICS Summit? What do you think we have going on, right? Look, I've been getting a lot. Are you worried about your gold getting confiscated? Or your silver getting confiscated? It is such a regular question I get. I promised I would address it one more time. Don't worry about your gold getting confiscated. Be a little more worried about your silver getting confiscated, because guys, as we are now moving into this period where demand for silver is only going to accelerate, the fear is this. The fear is that from a strategic perspective, they may come after. Thank you for the super chats. You guys are being super generous, and it is super appreciated. But there's a fear, and a growing fear, that at some point, from a strategic perspective, that could be the reason used to confiscate silver. So just, I don't think it's going to happen. Gold, I don't think, way less chance that your gold gets confiscated. They can print money and buy gold, right? They confiscated gold last time because they needed the gold to be able to print more money. They don't need gold. We're not on the gold standard anymore, so they don't need gold. Bald Guy, Money brought that up. I think one of the most breakthrough ideas of the year. So don't worry about your gold. Platinum, that's on the table as well from a strategic perspective. I'm not saying that I see it being imminent, happening, but people get really concerned, and you guys are always reaching out to me with fear that you could get your gold or your silver confiscated. Again, I would be a little more concerned about the silver, okay? We almost got 200 thumbs up. I'm waiting. I got more for you. Hold on. Here's a good one. This is, and I'm going to do a whole additional video on this. But when we look at the gold price, when we look at the silver price, it's a brilliant concept, right? What could be another catalyst? We know the BRICS coming up. The other two biggies that could happen, recession. Okay, we talked about that. Are we in a recession? Yes, we're in a recession. It's not Bidenomics, it's Bidenom tricks, because it's a mirage, right? We covered that already. The other big thing that we're just hearing people start to talk about, we got 200 thumbs up. Hey, I'm away from the basement right now. I make do with what I can. The other big thing that nobody talks about is a sovereign debt crisis. Do you know what that means? That means the United States getting to a point where they can no longer pay their bills, okay? Again, we're going to go into this in much more detail in the future, but here, I'll give you a nugget. This is a nugget regarding what's going on right now. In the next 2 years, just the next 2 years, 45% of the United States government's $34 trillion in debt, almost half of it, needs to be refinanced. I just want you to think about that for a minute. 45%, and the rates are now nearly double or triple what they were when that debt was initially issued. So are we heading into challenging times? Could a sovereign debt crisis? They aren't going to let the whole system go kaput. What they're going to do is print at the end, right? And right now there's monkey business going on, okay? There's no other way to say it. I don't want to confuse you guys, but there's a repo in the reverse repo system that the Fed has in place. There's like a slush fund that has about, I think, what, $1.6 trillion in it. That the banks, that's the bank's money that they put with the Fed, that's previously printed money that they're able to take out and buy treasuries. The Fed is making it more attractive for them to buy treasuries. When that money runs out, I don't know who's going to buy treasuries because China doesn't want them, Japan doesn't want them, and the American people aren't going to have any money. The only person left, the only source to purchase is going to be the Fed, and they're going to have to do that with printed money. Hey guys, thanks for joining me. I appreciate you being here. This has been great as always. I'm going to look forward to seeing you next time.